Hello everyone, and welcome to LET's weekly market snapshots. Today we're going to be having a look at the Fibonacci Retracements. This is an indicator which is used in trending markets. When markets are trending, they will often retrace a percentage of the prior swing within that trend. When drawing a Fibonacci retracement, we always draw from left to right. We will draw in an uptrend, we will draw from a higher low to a higher high. This will then project our Fibonacci levels onto the next swing or next possible swing within the trend. The main levels that we have with the Fibonacci retracements is a 38.2%, a 50%, and a 61.8% retracement of the previous swing. So we'll have a look at a theoretical example here. I've drawn an uptrend. We have a trend line coming up, and we'll draw a Fibonacci retracement from the first swing at the bottom. So we've got a higher low. We'll draw our Fibonacci up to our higher high, pull it across, and this will project our Fibonacci levels to the right-hand side here. On my retracement, I only have a 50% and a 61.8%. because I find these levels to be the most relevant and the most used. So what we'd like to see is that price will retrace back towards our 50% or 61.8%, and we want to see either a clean bounce off the 61.8, which is the strongest signal, a clean bounce off of the 50%, or a rejection within the range of the two levels. So we want to see any rejection off either two of these levels or in between. Once we've seen that within the trend Fibonacci's have already been respected, we can then start to apply them to the next swings within the trend. So here we can say we move up, we go to the next higher low, pull up to the higher high, we can see our Fibonacci is then projected onto the next swing. Price is seen to bounce off of our trend line, off of our Fibonacci 61.8, and then continues on with the major trend. We'll try again on the last swing. Here we can see higher low to higher high. Price pulls into the 61.8, bounces off, and this can give us an entry point as to where we can buy into a trend. We would like to see our Fibonacci line up with some other form of indicators, whether that be a support, a resistance, a trend line, a moving average, a pivot point. This will give much more confirmation to the bounce of this Fibonacci. So this is a retracement within an uptrend. A retracement within a downtrend is very similar. We still draw left to right. We will go from a lower high to a lower low and pull across. This will give us our Fibonacci levels on the next swing of our trend. We can see here we've had a rejection in between our two levels. We haven't had a bounce off either one, but we have seen price bounce off of our trend line whilst in between our 50% and 61.8%. If we put our Fibonacci down to the next level, here we can see we have had a bounce off of the 50% level and a bounce off of our trend line. And on the last example, we've had the same thing, a bounce off of our 50 level and a bounce off of our trend line. So this can allow us to find areas where we can get a good price and buy into a trend continuation. We always want to trade with the major trend. This will greatly increase the odds of success. We'll have a look through a live example on actual charts, and we'll find some entry points and see where it's possible to enter into an actual trade. So this is the S&P 500. This is a 4-hour chart. We can see prices in an uptrend coming through here. We're going to draw our Fibonacci's between these 3 points here. So uptrend will go from a higher low up to a higher high. We'll pull our Fibonacci across. We can see here our Fibonacci is lined up nicely with a trend line. We've had a clean bounce off of this trend line and off of our 61.8% level, and prices continued up with our major trend. A potential entry point here could be the close of this 4-hour candle. We've seen price reject these two levels. Price has moved up. We've formed a hammer candlestick pattern, and this could be the entry point that we could then get into the trade. We've got 3 levels of confirmation there, all telling us to buy this, and that could be a potential entry point for us to get in. If we have a look at the next swing, we'll see if prices respected these levels once again. So we'll go from our higher low there, and we'll pull it up to our higher high, pull the Fibonacci's across, and we can see that on this example, price has respected our 50% Fibonacci level, rejected that, and moved on to continue the major trend. In this example, a potential entry point could be on the formation of a spinning top candlestick after the bounce off of our 50% and our trend line. This would allow us to have a high level of confirmation that trend is going to continue, and would allow us to have a good risk to reward ratio, as entering in the close of this candlestick would have a stop loss underneath our trend line, potentially underneath our 61.8 to ensure it's a safe level, and then we could have our target placed at the high of the last swing. So that's how we can potentially use a Fibonacci in line with trend lines and continuation of major trends. Thank you for watching, and we will speak to you soon.